Welcome to Travisa Financial. Travisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Travisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Travisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Travisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Travisa Financial, no one serves first-time homebuyers better.
Again, welcome to our EEP MasterClass. So for today, we do not have any special guests. Today is going to be a little bit in-depth process of the EEP workflow. So I'm going to go ahead and share information about the EEP product for any of those that are new and don't know much about the program. And then I'm going to go over some tips and tricks for a smoother process and closing, and then also the workflow process and setting the proper expectations. This EEP program can definitely be a little different than what you're used to for traditional mortgage financing. So we want to make sure that you completely understand it and give you that information and that knowledge to help you succeed. So just a little bit about myself. My name is Monique Manaya, and I've been in the mortgage industry since 1997. I have done everything from loan officer, processor, I've been a branch manager, and most recently, I was the EEP production manager over at the entity. And so while I was running the EEP operations, I managed processing, closing funding, the tribal signers, and also the title company approval desk. So I have a plethora of knowledge about this program and also the processes and the workflow. I've come over to Travisa, and I'm here to help you do the best you can with this program with all of my knowledge of it, and I'm excited to work with you all. One reason why I picked Travisa is they definitely understand the creating generational wealth. And that's one thing that I feel like EEP is about. You know, when you look around at a lot of the people in this world, and and how they build their wealth. A lot of it is through real estate, and then when they pass and they give that on to their children, that's a huge way for generational wealth to occur. And so definitely one reason why I picked Travisa is they understand that. So besides myself, we have an amazing team. We have an amazing account executives that have been in this industry for 30 plus years. Norma Summers is one of our wholesale mortgage account executives. And then we also have Ben Slayton. He is head of business development, but he is also one of the account executives that can assist you all further. And we are all here to help you succeed, whether through these webinars or if you want any private trainings, if you want any trainings that we can host for your operations team, your processing team, to help them understand how it all works. Real estate agents, title companies, we're definitely here to make sure that everybody understands the program and the process. So let's dive into this earned equity program. The special case of the government entity. So we've already gotten to the point where your home buyer does not qualify for traditional financing. So you're going to get your home buyer pre-approved for EEP. Your home buyer is going to find the home of their dreams. It does not need to be a home that is offering seller financing. This opens the door to a lot more options. And then simultaneously at closing, the government entity is going to do the purchase of the home through FHA financing through us. And they're both going to sign a homeownership finance agreement, the home buyer and the government entity. So this homeownership finance agreement, it's going to grant the home buyer full equity rights and the ability to live and control in the home. They can make whatever repairs, remodels they want, up to the stage that it would require a permit from the city or the county. And at that point, that's where we just need to get special approval. They have an amazing servicing department that can assist with that if that ever becomes a case or a situation. When your home buyer and the entity sign the homeownership finance agreement, then there's a memorandum. There's a memorandum to the homeownership finance agreement, and this is recorded on title. So this really gives your home buyer the security interest in the property, and that's one thing that I love about this program. So just to recap, we have at the center our government entity. Our government entity is a Native American tribe. It is the Tule River tribe, and government entities actually have the ability to obtain FHA loans non-owner occupied. And so this is one of the reasons why this program works so well. So we have our government entity that is going to take out the FHA loan, non-owner occupied, and is going to pay off the home seller, the seller of the home. So the seller of the home is going to get their funds, going to get their money just as they would on any other traditional financing. And so then you have your government entity that then enters into the finance agreement with the home buyer. And so when the home buyer does go under contract with the seller, there is an assignment addendum. This assignment addendum is going to be signed by the seller, your home buyer, and then the government entity is going to sign this. And from that point on, that's when everything goes through the government entity for the purchase of the home through FHA. So one thing about this program that we understand, they're not qualifying for traditional mortgage financing. So there's definitely some reasons for that, anywhere from citizenship status to low credit scores, possibly bankruptcies, can't prove income. So we have the 3.5% down, and it is for I-10 non-perm residents, including DACA, and U.S. citizens definitely qualify for the program as well. Low and no credit scores. So 580 credit score for a minimum. And if you pull credit and you pull credit with no scores, that's fine. So with this program, if you do pull credit scores 580, mid score or higher, we only need one trade line. If there is not a trade line on credit that is 0 times 30 over the last 12 months, then you can obtain an alt trade line. And so this is the same that goes for the no credit score. You pull credit, there's no scores, then you can provide alt trade lines. And for the no score, you just need to provide 2 alternative trade lines. And these can be anything from, utilities, auto insurance, cell phone bills, things of that nature. Income. So we have the 3-month bank statement program. This bank statement program is not only for your self-employed borrowers, but it's also for your 1099, W-2 gig workers, and we can go up to 50 over a 60 DTI. There's no source or seasoning of funds to close. We definitely understand that some of the cultures in this country do not have faith in the financial institutions, and they like to save all their money at home, quote, mattress money. This is something that is allowed because we understand that they want to save their money at home, and then there may be a large deposit. And so we're not going to source or season that large deposit. If it is rather large, then the underwriter may want a letter of explanation just explaining, saving the money at home or whatever the nature of the situation is. Back to bankruptcies. Bankruptcies are okay. So if you have a home buyer that is in a Chapter 7, they can go out, they can find their home, they can go through the process, and we just need to see that the bankruptcy is discharged 1 day prior to closing. It does have to be reporting on credit, and then also the same with the Chapter 13. We only need to see a payment ledger and just to ensure that there's been no missed payments on that. For property types, we follow FHA guidelines, 1 to 2 units, PUDs, condos, and manufactured homes. For the condos, they do have to be FHA approved, so checking into that prior to getting started is definitely a great idea. And seller contributions up to 6% of the sales price. I want to get into a little bit more of the 3 months bank statements for self-employed. So there is a tiered expense ratio option. The standard expense factor that the entity's underwriter is going to use is 45%. Now, if you think about your home buyer and what their business is, what their products are, if it's service-based, how many employees they have, and if you feel like 45% is pretty steep for what they do, then we have a tiered option. So if you have a service-based business that consists of, possibly therapy, house cleaner, consulting, we just need some additional documentation. And we can go all the way down to a 10% expense ratio, depending on how many employees they have. So some of that supporting documentation includes articles of incorporation, CPA letters, online internet documentation, those types of information that can, give a bigger picture of the home buyer's employment and their business that they own and what they do and employees. So qualifying the borrower for EEP, of course, you want to look at not only US citizens, but ITIN is huge on this program. Allowing for full doc, you would need a prior year W-2. It says here 2 months pay stubs, but I think they've knocked that down to 1 month pay stubs. And a written VOE is extremely important if you're trying to use any sort of overtime. And then, of course, we have the alt doc, which is the 3 months bank statements, 580 credit score with only 1 major bureau. So if you pull credit and you only have 1 score, it's above 580, you're good to go. Again, the the no score program with 2 alt trade lines. Your verification of rent needs to be for at least 12-month history, 0 times 30. And then we only need 12 months of employment history. Of course, if they have more, the better. Again, max DTI 50 over 60. If you're going W-2'd and all you need is 2 months bank statements for funds to close, and gifts are allowed. For those funds to close, the entity has their funds to close. They have their closing costs, which entail in a few costs, underwriting, processing, and then also they take the first payment up front. So we want to make sure that we're taking all of the fees and costs and seller credit, earnest money credit, all into consideration. We have an amazing worksheet that goes through to where you can enter in all of the information, and it gives you your bottom line so that you can know up front and let your home buyer know. So qualifying the property is just a little bit different than traditional financing. Still use a full FHA appraisal. If it is subject to, those repairs have to be completed. Although the home inspection is the biggest place that you want to keep an eye out for, because if your property comes back as a C4 or greater on the condition on the appraisal, then you need a home inspection. If the property is 1979 or older, you need a home inspection. And these home inspections, when the underwriter over at the entity is reviewing them, they're looking for major safety concerns to be completed and repaired prior to closing. So keeping an eye open for major safety repairs. Obviously, we don't want anything to happen to the homeowner when they move into their brand new home. So neither does the entity. And so we want to make sure that if there's anything safety, it gets repaired, fixed, completed prior to closing. If there's minor issues, then they can put those on a cure agreement anywhere from 30 days to 6 months. And then if there is a home inspection, we need to have an attestation signed so the home buyer acknowledges and that they have been presented a copy of the home inspection, and they're aware of, you know, everything that it entails and the property condition. Certified home warranty is required when those 2 items are in play, and aluminum wiring is ineligible. Service of AC, heating in the last 12 months, and then all major systems, electrical, HVAC, plumbing, etc. So I was just mentioning that ITIN is big for this program. And so if you look at the competitive market out there for the ITIN community, we have other lenders that are requiring 15 to 20% down, bank statement programs 12 to 24 months, DTI maxed at 43%. And if you want to go higher, you need to have at least 2 to 3 comp factors and high credit scores, 700 plus. Again, at Travisa, 3.5% down on our earned equity, 3 months bank statements, DTI of 50 over 60, and 580 credit score with only 1 major bureau. One of the reasons why the EEP program is near and dear to my heart, and I really believe in it, is the client actually gets homeownership rights. They get to build the equity. They get the full rights to improve the home and then sell the home. Tax benefits. They get sent a 1098 interest statement at the end of the year. And so this program is really amazing and unique to all of these aspects that you're seeing here. And again, securing the client's rights. So the complete design of EEP is for the client to eventually acquire the home in their own name. So the government entity isn't in the business to foreclose on home buyers. They are not in the business to be landlords. They want to see that the homeowners are going to eventually, now they don't have to eventually own the home or sell the home. They can stay in it for 30, 40, 50 years if they want to, and then title turns over to them. They definitely want to see that the homeowner either can assume the loan or sell the home, take that equity, purchase another home, and just build and grow with this program. They can use it again if necessary. But in the meantime, the client's interests are definitely protected by that memorandum that is recorded on title through the county. Okay, everybody. So what I'm going to do here is I want to dive into the whole process of the transaction. And so I'm going to open it up to Q&A while I go through these slides. I want definitely everybody to understand the process. It can be a little bit of a different process for everybody. And so we have one question right away that I'm going to go ahead and let Vince. Okay, so tips and tricks for a smoother closing. Cover letters. We all know that our home buyers are not qualifying for traditional financing for one reason or another. So the underwriters over at the entity, they love cover letters. Every file has a story. That's always something that I've said, to my processors or, to anybody that I've managed is every file, I feel like they have a story. And you talk to the homeowners and you know their story and you're knowing how to put this together for them. But when you submit a file to an underwriter, they didn't have that communication with the home buyer. And so using a cover letter to put together their story, whether it be their credit situation or, how you guys are structuring their income, because they're a waiter and they receive their salary, but they also receive a lot in tips. And so then they also want to use bank statements to show the tip income, or they have 2 full-time jobs and they also have a side job part-time. So definitely spelling that out is so important for these underwriters to take your file and not suspend it, basically. So we don't want them to look at your file and say, this makes no sense. I'm going to just suspend it because I don't understand it. Again, also with the assets, if we submit a file and there is absolutely no money in the bank, let's put on that cover letter, they've been saving cash at home, and as we get closer to closing, they're going to deposit it then, or they're expecting a gift letter or a gift. And so then we'll be providing a gift letter down the road. So I feel extremely important to provide a cover letter. The underwriters are going to love it, eat it up. Trust me. I know all of these underwriters. Also, one thing is the 1003. So the entity has come out with a pre-processing structure. They have pre-processors that are now vetting the files as we submit them, whether they are TBD or under contract. They are going to go through your 1003, and if anything is not completed, they're going to push it back, and you can lose days just for that, unfortunately. I'm talking employment addresses, phone numbers for employees, the declarations not being completed all the way. They may rent at home with their family and that bubble is not marked that says that they're living at home rent-free. So that is huge, huge, huge. To save time is make sure your 1003 is 100% complete. We need at least a 12-month housing history and a minimum 12-month employment history. So make sure you're putting in past and previous on those sections as well. Also, letter of explanations. So how was income calculated? Again, where's the down payment coming from? These would be ones that are coming specifically from the home buyer that is above and beyond your cover letter. What their current home disposition is. Do they currently have a home and they're going to sell it, or are they going to rent it out? Speaking of the income calculation worksheets. Again, the self-employed is going to be automatically calculated at 45% expense factor. I get several files where they come back suspended and I reach out to the broker and I'm then told, well, we wanted the 10% expense factor because of this, this, and that. Let's use and utilize the income calculation worksheets. Let's put our expense factor in there where we're wanting it to be. Let's provide a letter of explanation from the home buyer about their business and then the supporting documentation so that we can put a full rounded file together for the underwriter. Huge, very important to have a successful file. Did anybody have any questions on this? I don't want to move ahead too fast if anybody had any questions in regards to any of this.
Yeah,
Any questions at all?
Letty has two questions. The first
Okay.
one is employment history is 12 months. OT is acceptable for 12 months as well and not 24 months.
So, yes. Yes. So what you're going to want to do on that is if they've only been there for, let's say, 14 months, but you want to use overtime, then probably should get the previous if they had overtime there. But if we can have the current employer state that it is guaranteed to continue, then there's a good factor that we can get an exception for that.
And the other question is, often 19 borrowers live rent-free with family. Will a rent-free letter be accepted?
Rewinding back when I worked with the entity, yes. But as I have found out more recently, that if that is the case, they will still accept it, but they just want to see a little bit more. For instance, if you have a home buyer that says, I've been living at home rent free and I've been doing this to save money for the down payment on the house, but then they don't have any money in the bank, that doesn't make sense. So we want to see money in the bank. They can obviously also get a gift, but reserves. The entity loves reserves. If we can show reserves, we can definitely. They don't want to decline files. They don't want to suspend files. They want to make these work. They really truly want to help people get into homes. And so they will make exceptions on a lot of their guidelines. The DTI, credit score, those type of things. So having reserves is huge. So I would say if they live rent free, we got to make sure that they have the money in the bank for the funds to close, to show that they've been saving, or a combination of gift, funds to close, and 2 months reserves. Some other compensating factors that they'll take are time on the job. If it's not the rent from family type of situation, verification of rents that are for 24 months versus 12 months. So definitely that's something that we want to take a look at when you're qualifying your home buyer. So I hope that made sense. Did that make sense? Okay, anybody else have any other questions before I move on to the workflow process and setting the proper expectations?
Yeah, we have two more.
Okay.
Stephanie asked, are we running AUS or solely going by the credit score and DTI?
You are not running AUS. This is solely by the credit score and the DTI.
And Letty has another question. Can we exclude installment loan payments that have less than 10 fixed payment left of the DTI?
Yes, for that for questions of that nature, they follow FHA guidelines. So if FHA, whatever amount of months FHA, I haven't looked at FHA guidelines for a minute, but if it's still 10 months excluded for FHA, then that's what they'll go off of.
I think that's it for the moment.
Okay. All right, everybody. So I'm going to move on next to the workflow process and setting the proper expectations. This program requires 2 files, okay? So you're going to have your homebuyer TBD file. This is the file that is getting submitted to the entity and the underwriter for them to pre-approve your home buyer to enter in the homeownership finance agreement contract with memorandum that's recorded on title, okay? Then we also need to have a Tule River file with the subject property, because this is the file that is going to be submitted to Travisa's underwriting, that is going to go through the process of closing, funding, and getting FHA insured, okay? So your home buyer TBD file is not a TRID file. There are some initial disclosures that we have that if you feel like you want to present these to your home buyer, they explain the program a little bit better. They explain the process, and I personally, if I was out there originating these files, I would want to present these to my home buyer, not only to have them more educated, but also so that they feel like they're actually in a homeownership process. Because when we disclose, so Travisa Financial is going to disclose on your Tule River file with the subject property, but we're not disclosing to the home buyer. We are disclosing to Tule River. So your home buyer is not going to get any initial disclosures. And if you choose not to give them those initial ones up front, the first time they're going to receive anything is when they receive the initial CCD, which is the initial closing cost disclosure. And this is going to be the one that goes over fees and how much they have to bring into closing. So I would prefer to either give them these other disclosures that we have that you can, they're in TPO Connect. Your account executive can email them to you. I can email them to you. So you can either present them at the front of, at the beginning of the transaction, and then give them the initial CCD later, or you can present all of those at the same time. But it's very important to know that there are two files. We've had some situations where loan officer uploaded home buyer TBD file. It got approved from the entity, and then they uploaded the purchase agreement to that file, and it sat for a few days because nobody knew that it was under contract and that, there was a Tule River file that needed to be disclosed on. So very, very important to know that there are two files. Traditionally, how it works is after you have your two files in place, they're basically both submitted the same exact way. One has a subject property and gets triggered for TRID, and the other one doesn't. As you work on conditions, your home buyer conditions are going to remain in your home buyer TBD file. Your property conditions are going to go into your Tule River entity subject property file. So that helps keep them separate. We don't want it to put any of your home buyer docs into the Tule River file that's going to go to HUD and get insured. So moving on again to the property, the appraisal, and the home inspection. So just diving a little bit more into the property. If it's a condo, make sure it's FHA approved. The appraisal you're going to get an okay to order the appraisal after Tule River has e-signed the initial disclosures. That gives us our intent to proceed. And then here at Travisa Financial, we're going to pull the FHA case number. At that point, we're going to give you the okay to order the appraisal. You do this in TPO Connect. Okay. One of the biggest things about that is that when you're ordering the appraisal, a comment needs to be put in stating that the payment link needs to be sent to your home buyer's email address. Otherwise, you have Tule River as the home buyer. They're going to continuously send Tule River the payment link. And I'm going to tell you right now, the girls over there are just going to ignore it. So we want to ensure that the comment is in there that the payment link needs to go to your home buyer's email. Again, with the home inspections, 1979 or older, or if your appraisal comes in and the condition is a C4, C5. Now, this isn't something where your appraisal comes in and you say, oh, it's a C4, but it was built in 1998, so I'm good. No, it's an and/or situation here. And again, with the home inspection, safety issues. We want to make sure our home buyers are safe. We want to make sure that, you know, everybody moves into these homes and are given the same fair treatment that anybody else would have been given when they're out looking for a home, considering their families and their safety of their families. So that brings up setting the proper expectations. Setting the proper expectations ahead of time with our buyers, the sellers, our real estate agents, and our title companies. There can be delays on these files. There can be delays, specifically what I just mentioned in regard to the home inspections. There can be delays on turn times. Specifically, the entity has, you know, this program is getting bigger. When I first was over at the entity, they were not closing very many loans, and that's what gave me the opportunity to jump in and develop it and build it. And it has grown, and it has grown rapidly. So that being said, turn times over the last few months have increased. They are working on hiring more people. When I was running the EEP, approvals were same day to just under 24 hours. Now we're looking at anywhere from 48 to 72 hours. Same with condition reviews. And so I think letting everybody know that this process, you know, the home buyer is going to buy the home, but it could take some time. I have some experienced people that have done EEP for a while, and as soon as they get the process, they get the flow, they get the standard conditions and what they need, and they start getting things up front, it moves a lot quicker. They'll move a lot faster. So with that being said, and with the entity hiring on more people right now, I feel like the turn times and how long stuff is taking now is only temporary. You guys are going to get much more experienced. For instance, pest inspections. There's 35 states that require pest inspections. So make sure you know that. If you want, I have a list of all the states that require pest inspections. You know, knowing the program and asking the questions so that you know up front so that you can have a successful transaction and a smooth closing is extremely important. Speaking of the closing, there are a few factors involved. There's overnighting packages. Our Tule River signers, they stay in their office where they're at in California, and then there's some in Utah, and they sign, so they have to overnight the packages. Wires transferred. Your home buyer is going to wire 100% of the funds to Tule River, and then Tule River is going to wire the funds to close on the bottom line of the CD to title. With that being said, wire transfers can take some time. Ideally, until you really feel like you have the process down. For example, Monday close signing, Wednesday funding recording. Tuesday, you know, this is examples. So if we're looking at a Wednesday closing signing, you're more than likely not going to fund until Friday. So setting that expectation with your realtors, your buyers, your sellers is just going to only set you up for success. Do we have any questions?
Yeah, we have two. Michelle asked if the contract in Tool River or borrower name?
So your purchase contract is going to start out with your home buyer. So your home buyer is going to go out and they're going to pick the home that they want. They're going to put their earnest money down. And as soon as everything is accepted, there is an assignment addendum that the buyer, the seller, and Tule River are going to all sign. This is going to assign the entire purchase contract to Tule River so that they can then continue on with the FHA financing. There have been a few times that not only myself, but our account executives are amazing. They will talk to your real estate agents and explain the program to them because, yes, this is a very different program. So we're willing to help out with that if this is presented and they're just, no, absolutely not. It's out of fear. They don't understand it. So we're definitely there to help explain it so that they do feel comfortable and understand it.
We have another question. Vince asked, can we send in a TBD file before they find a home, or do they need to have a home under contract first?
No. So we actually would highly suggest you send them in as a TBD to get pre-approved. So you can start that first right here, this homebuyer TBD file first. We can get the homebuyer pre-approved directly with the entity, and then they can go home searching. So with that being said, we can also do both simultaneously if you have a home buyer that already is under contract and you have just recently found out that they don't qualify for one reason or another. We can do both at the same time. So either or, we're more than happy to do. Any other questions?
No, that's it for the moment.
Not only do we do EEP, but we also have our Advantage DPA program. You guys, this is an amazing down payment assistance program. There is not only 3.5% forgivable, but 5% forgivable with no payments during 3 years, I believe. So yeah, Advantage DPA program is amazing. Reach out to your account executive. They can give you more information on that program. FHA, VA, conventional, USDA, we have all the programs over here. We also have our EEP support center. So if you do have any questions, you think of something later, you can email our EEP questions at travisafinancial.com, or you can call 877-888-ASK-EEP. Now that phone line goes to me. I am in and out of meetings and trainings and calls all day. So if I don't answer, please leave me a voicemail or shoot me an email and I will get right back to you as soon as possible, okay? So we have a lot of resources. You can reach out to your account executive and you can get flyers made for this program. So if you want to have these flyers made for EEP, we can custom make them to have your name, your logo on there with us. We can set up your own private trainings, as I mentioned before. I typically do a weekly webinar that also has Q&As at the end. And for this month, this is going to be our last webinar for this month with the holidays coming. So starting back up in January, we're going to have those again. And again, our master classes to where we usually have some special guests. I don't know if you made it to last month, but we actually had Sean King on. He is from the entity and he provided a lot of great information. So make sure you check out those, and we're excited to work with you. I definitely am. I love all my brokers. I love my loan officers. I love my clients. I love talking with you guys, teaching you guys, especially about EEP. So I look forward to working with you guys more. And it looks like I'm going to give you about 10, 12 minutes back of your day because we are done a little early.
We have one more question.
Just kidding. Go ahead.
Are assets required for TBDs?
Sorry, say that one more time.
Are assets required for TBDs?
So in that situation, I would just throw in the cover letter or the letter of explanation explaining that they're saving money at home right now and they haven't deposited it in the bank, or they're going to be getting a gift letter. And right now we want to make sure that income, credit, and everything else like that is sufficient before we move forward.
We have two more. Do we have the material in Spanish?
Unfortunately, we do not have the material in Spanish. So when I was over at the entity, we did have Spanish copies, although the attorney advised that if it was mistranslated by just, you know, a word or two, then that could open them up for lawsuits. So the best thing that I would say you could do is when you give them the forms, you can actually run it through, what is that? Google Translate. You could run it through Google Translate, copy, cut, and paste and run it through Google Translate, or even I think ChatGPT can translate it for them. So yeah, I would do that.
We have one more. Where can we find the resources?
Find the what?
The resources.
The resources?
Yeah.
So you're going to want to reach out to your account executive. Or you can reach out to me. But a lot of the material is going to be found in TPO Connect under the program and matrices, I think it's called. Down at the very bottom is the Earned Equity program, and that gives all of the forms that you need. It gives the initial disclosures that I was speaking of earlier, if you want to present those to your home buyer. It gives the assignment addendum. It basically has everything in there. So TPO Connect or your account executive, or of course myself.
That's it for the Q&A.
Okay, perfect. Well, again, goodbye. Have a wonderful rest of your Wednesday. Happy holidays, and we'll be back on webinars in January. Thanks so much, everybody. Bye.